and welcome to our YouTube channel. We are feeling deeply honored by your consistent support and loyalty to view our channel. After a thorough research and going by the market movement past week we have identified some long-term tips for you all. So based on some gold digging and observations made and using our professional insights, we have identified a couple of stocks which haven't recognized despite market improving and give a chance to earn a cool 50 to 100% within a few years time frame if market up move sustains. So with that, a very warm welcome to our channel and a special welcome to my next episode of long-term value investing. So मेरे दलाल स्ट्रीट के दोस्तों, if you have really liked all the videos, then please do praise the team in the YouTube comment section. Also in the past week, we have given multiple short-term trading calls which have given decent up moves and helped traders earn 5% in a couple of days. If you earn post budget from these tips, kindly use the comment section to praise the team. Also, to understand the video, make sure to view the entire video and not leave in between to understand better. So do share my video links in all the social media platforms and like my video and subscribe to the channel. And if you're interested in becoming my mate on Dalal Street, it's a humble request to you all to like my videos. As more the likes, more the motivation to create the videos. So as promised, we are back with our long-term trading tip after doing some great gold digging for you guys. So long-term trading tip for this week is buy Chemkin Specialty Chemicals Limited. Buy at CMP rupees 435, target 750 in 2.5 to 3 years long term. Fundamental analysis. Chemkin Specialty Chemicals has listed with a massive 115% premium at rupees 731 over its issue price of 340 per share earlier last year, but as the day has progressed, it witnessed some profit booking at higher level and fell below rupees 600 levels intraday despite strong market trend on October 1st. Due to massive profit booking, it was trading at rupees 585, up 72% over issue price of rupees 340, but 20% down 20% from opening price of 730 odd levels on the BSE. As there is an upper and lower circuit limit of 20% on day 1, the stock cannot fall or increase beyond the said limit set by exchanges. The listing was on expected lines given the company being a leading manufacturer globally of the pharmaceutical chemicals and oil well completion chemicals. But should investors hold shares received in allotment, buy additional shares or book profits now? Majority of experts advised booking profits and if possible one can hold partial share for medium to long term given the expected growth in coming years. Incorporated on the late 1980s, Chemkin Specialty Chemicals Limited, which is Chemkin, is a manufacturer of specialized chemicals such as HMDS and CMIC, which are predominantly used in pharmaceutical industry, which is pharmaceutical chemicals, and inorganic bromides, namely calcium bromide, zinc bromide, and sodium bromide, which are predominantly used as completion fluids in the oil-filled industry, which is oil well completion chemicals. Pharmaceutical chemical segments constitute 64% to overall revenue. Oil-filled chemicals contribute 30% and rest comes from others. The company has 7 manufacturing plants at a single location, Manjusar in Gujarat, having volumetric reactor capacity of 374 kiloliter as of July 2020. Its key customers include Hetero Labs, Laurus Labs, Aurobindo Pharma, MacLeod Pharmaceuticals, Sanjay Chemical Limited, etc. In pharmaceutical, and Sri Radha Overseas, DMMC, CC Gran Liability, etc. In oil well completion chemicals. Now the prices are consolidating between 400 and 450 after the profit booking, and with rising delivery percentage and a lot of marquee equity funds entering this counter, the prices must rise in the long term. It has the following strengths: market leadership in its products such as HMDS and CMIC, anti-China sentiment globally to benefit the company, expansion in pharmaceutical chemicals and focus on exports to expand margins, superior return ratios and healthy balance sheet. Leading manufacturer globally of the pharmaceutical chemicals, and in India for the oil well completion chemicals, India is currently a net importer of HMDS, with about 40% of India's current domestic demand being catered by imports majorly from China and Germany. India is expected to witness a demand growth for HMDS of 10.6% CAGR between CY19 to CY23, according to Frost and Sullivan report. Chemkin is the only manufacturer of HMDS in India and well positioned to capitalize on the potential growth of HMDS market. Due to monopoly business, the prices are expected to go up with improved sales numbers. India and China are the only countries that produce CMIC. Company's share in the global CMIC manufacturing capacity has increased from 7.07% in CY14 to 26.16% in CY 2019. India is a net importer of CMIC, with about 62% of India's current domestic demand being catered by imports from China. India, a major CMIC consumer market, is expected to witness a demand growth at a CAGR of 11% between CY19 to CY23. We believe Chemkin is well positioned to substitute the imports from China, and hence an opportunity to grow at a CAGR of more than 25% from CY19 to CY23. Anti-China sentiments likely to aid performance from Chemkin, China being the largest players into HMDS and CMIC, with total capacity to the tune of 50 to 60% of the global market, is one of the more major exporters of these two chemicals across the world. However, India imports to the tune of 40% of HMDS, which is demand of 4000 MT, and 60% of CMIC, which is demand of 2530 MT, which majorly comes from China. Post COVID-19, there has been anti-China sentiments across the world, which we expect to benefit Chemkin, given that it has already expanded capacity of HMDS and likely to increase capacity for CMIC by end of financial year 2022. It is evident that the company could likely capture import share in the years to come, in a view that it maintains pricing dynamics in line with the Chinese players. Exploring newer applications of the existing products, as well as focusing on a new products that are in synergy with the current operations, Chemkin currently supplies HMDS largely to the pharmaceutical industry and aims to market their products for end-use applications in other industries, including the rubber and semiconductor manufacturing industries. Company recently commissioned plant with capacity to manufacture 600 MTPA of high purity HMDS, which find application in pharmaceutical, silicon and rubber, as well as semiconductor industries. They aim to undertake the development and manufacture of newer products largely focusing on chemicals used in pharmaceutical, semiconductors, and rubber industries. Chemcon currently supplies the oil well completion chemicals largely to customers in India, the Middle East, Serbia, and Russia. They aim to expand the sales of the oil well completion chemicals in existing and new geographies, including Nigeria, Malaysia, China, and Ghana. Also, companies focusing on developing new products such as CBC and 2.5 DHT to diversify its product basket and improve top line. Healthy balance sheet and strong financials over financial year 2019 to 2020, Chemcon's revenue, EBITDA, PAT grew at a CAGR of 29%, 25% and 36%, led by volume and realization growth. Its EBITDA margins stood strong at 20 to 25% over financial year 2018 to financial year 2020, given the leadership position and complex nature of products. Given continuous capex incurred over the last 3 years, the return ratios have tapered down through healthy with ROE and ROCE at 40% and 33% in financial year 2020. Quarter 2 of financial year 2021 marked demand recovery and sales volume growth quarter-on-quarter basis. Net sales were up quarter-on-quarter to 615.4 million in quarter 2 of financial year 2021. This was on the back of sales volume and realization growth in pharmaceutical chemicals, especially CMIC. Management indicated oil well filled chemicals reported lower revenues in quarter 2 of financial year 2021, but they saw significant recovery from October 2020 in the segment. EBITDA was up by 67% quarter-on-quarter and 19% year-on-year to 233 million in quarter 2 of financial year 2021. EBITDA margin stood at 37.9% versus 29.9% in quarter 2 of financial year 2020. PAT for quarter 2 of financial year 2021 stood at 197 million, up 17.5% year-on-year and 84% quarter-on-quarter, while PAT margin stood at 32% in mentioned quarter. Technical analysis. Yearly charts reveal that the stock is consolidating in a rectangular pattern ever since the crash on IPO listing day. Therefore, the time seems ripe for the stock to give healthier returns to long-term investors. The company has low debt with a zero promoter pledge. It witnessed growth in quarterly net profit with increasing profit margin, which is year-on-year. There is a bearish sentiment currently prevailing and the company's stock prices have performed poorly by crashing down from 730 around levels to 430 now, despite good sales and profits in recent quarters. Therefore, the company has to recover soon. I believe that the prices should cross the all-time high in the long run, maybe within 2 to 2.5 years time frame. Also, money control technical rating is bearish currently, with moving averages and technical indicators being showing bearishness and bearish engulfing candlestick pattern emerging. The price movement seems to be a last fearful move before the rise and recovery in stock price. Also, MACD is showing an alarmingly huge bearish crossovers. So it is expected that after this healthy bearishness and consolidation between 400 and 450, one may enter now for a stock where there are higher chances of an upswing. So guys, buy Chemcon at CMP rupees 430 for a target of rupees 750 to 2024 to 30 months time frame. Let's hope you're liking all our earlier videos. Continue buying after doing some thorough analysis and generating self insights to earn in this market, which is unpredictable and requires a lot of discipline, time, and focus to take a position or trade or investment. As said, concentration is mother of all the success. This market demands just that. So guys, be prepared for the risk and uncertainties, but if calculated risk is taken, then one can make 5 to 10 trades per day, per year, and also make a big profit, about $1 million, enough to meet his annual expenses. So keep at it and keep growing and in experience, and learn from mistakes and past losses and earn. So guys, that's it for today. Kindly like all my videos and also comment on the budget day video of option buying if you made about ₹1 lakh. We'll be back with mind-blowing technical analysis and very best of Hum Do Hamare Do season. So till then, stay tuned and thanks for watching.